We now have a number of big banks who have all came through and announced their earnings, and their numbers are looking very solid. And some of this positive news out of these big banks has translated over to smaller banks like SoFi, which is up 7% on the day. So in today's video, we're going to take a look at 3 big banks that have all now announced their earnings. That is going to be JP Morgan, Goldman Sachs, and Wells Fargo, and we're going to see what they could mean for SoFi's earnings coming up here on January 27th. But before we jump into all of that, thank you guys so much again. I keep saying this in every video, and you guys keep continuing to surprise me with the support that you're showing to the channel. So far this year, we have grown so much, and I appreciate that. That is due to everything that you guys are doing, subscribing, liking, leaving comments down below. It means so much to me, and let's keep the ball rolling throughout the year. We are only 2 weeks in. I set a very high goal for myself on this channel for 2025, and we're well on track right now for hitting that goal. So I appreciate it so much. If you enjoy the video, drop a like down below and subscribe for more videos like this one. And with all the support that you guys give the channel, the very least that I can do is be as transparent with you guys as possible about my positions in the market. Right now, the YouTube portfolio is sitting at a value of $58,455.75. And within this portfolio, I hold the following positions. I have Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. The newest position is Super Microcomputer. I bought 50 shares around a week ago. The value at the time was around $1,700. It's currently dropped around 10% to $1,500. The second newest position is Google, which is up around 16%. We also have Apple up around 400%, Microsoft up around 300%. Palantir, we trimmed coming into this year. So we had 100 shares at the start of 2025. However, we've trimmed that down to around 10 shares, and that's currently up around 640%. We trimmed that at a very nice time because the stock has dropped a little bit since we actually sold out. But the company that we're going to be talking about in this video is SoFi. We hold 200 shares in this portfolio, and it's currently up around 160%. And then on top of those positions, I have SCHD and VYM, which are 2 dividend ETFs. If you've been following the channel for a while though, you know that I plan on selling out of SCHD at some point in the future. Right now it's up around 14%. If we see a large dip in the market and SCHD holds up strong, then I could see myself selling out of this position, but I just want to make sure that I have something to move the cash into. And right now it's not like I'm light on cash. I also have $18,000 of cash in this portfolio. But with that out of the way, we're going to go ahead and jump into the video because we are going to be talking about a number of large banks and their earnings announcements. JP Morgan is one of those, and on the day it moved up around 2%, which is actually one of the smallest moves out of the big banks. But that small move is not due to poor results. We can see that their EPS numbers beat by almost 20%. They reported $4.81 compared to analyst expectations of $4.04. They also beat on the top line revenue numbers by almost 3%, reporting $42.77 billion compared to an expected $41.56 billion. So top line growth overall was fairly solid, but the bigger beat came from their bottom line, and that had a lot to do with net interest income, which came through at $23.47 billion, exceeding analyst expectations by almost $400 million. And overall, that could be a very good sign for SoFi, because when we look at their third quarter results, they posted a net interest income of $431 million. That was up 25% year over year, despite their margin decreasing from 5.99% to 5.57%. Throughout the middle of 2024, we saw the 10-year treasury rate drop significantly, and this was due to the fact that the market was starting to price in that the Fed would continue to drop rates. However, in the back half of the year, we heard from the Fed a change in their sentiment around the market and whether they would actually decrease rates as fast as people thought. And because of that, the 10-year treasury rate has actually rebounded back to where it was in May of 2024. And this is what's helped drive some of those positive results for net interest income for these companies. It's similar for Wells Fargo. Wells Fargo on the day was up around 6.5%. And that's despite them beating by smaller margins compared to JP Morgan. They only beat on EPS numbers by less than 10%, coming through with $1.48 of EPS compared to analyst expectations of $1.35, and they actually missed on revenue by 1% 1%, reporting revenue of $20.38 billion. And that again is because of this key metric, net interest income. They are expecting their net interest income to be 1 to 3% higher than their 2024 number of $47.7 billion. For Goldman Sachs, they were up 6% after announcing their earnings, but it's for a little bit different of a reason compared to JP Morgan or Wells Fargo. They came through and beat significantly on both the top and bottom line. They reported revenue of $13.87 billion, which beat analyst expectations by 11.28%. They also smashed results on the bottom line, beating analyst expectations by 44%, reporting EPS of $11.95 compared to analyst expectations of $8.29. And the reason for these very strong numbers from Goldman Sachs had to do with their trading. Equities trading brought in a revenue of $3.45 billion. Their fixed income trading brought in $2.74 billion. And their investment banking fees brought in $2.05 billion. SoFi doesn't offer a lot of the same services that Goldman Sachs does, but there are a couple important things to keep in mind. The first being that Anthony Noto did work at Goldman Sachs at one point in time as a managing director. So he does have a very good knowledge of how Goldman Sachs operates, and he could use and has shown that he has used a lot of those strategies at SoFi. The other important thing to keep in mind is that SoFi does offer investment tools. What that could mean is if we have seen a lot of strong trading over the last quarter, it could show that a lot of members on SoFi could be taking advantage of this investment offering that SoFi has and using more of SoFi's ecosystem. And obviously, if there are more people using SoFi, that's going to impact their numbers. Right now, SoFi is expected to announce their earnings on January 27th, and analysts have expectations of EPS coming in at 4 cents and revenue being reported of $679.73 million. And in my opinion, I think a 3 to 5% beat on the top line should be easily achievable, but for the bottom line, that's where SoFi could really shine. Because right now, again, analysts are only expecting around 4 cents of EPS. I think that they could come through and post somewhere around 8 to 10 cents of EPS. Keep in mind that in the third quarter, they beat analyst expectations by 1 cent, reporting 5 cents of EPS. And that was despite net interest income margin decreasing year over year. If we see it increasing and compounding on itself in this next quarter, I think again, they could report somewhere between 8 and 10 cents of EPS. And if they were to put up 10 cents of EPS in the fourth quarter, that would blow analyst expectations for 2024 out of the water, because they are only expecting EPS for the full year to come in at 12 cents. If we see them in one quarter put up 10 cents, I think that SoFi's stock price could move in a massive way. The only thing in my opinion that could prevent that is valuations, because right now the forward PE ratio on SoFi is 72.46. That's a little bit above the range of where I would like PE ratios to be. Personally, I like PE ratios below 60. 60 is kind of the limit that I have read and looked into of where companies can actually keep up with that valuation. They have to continue to grow their top and bottom line numbers, and 60 really tends to be that cutoff point where they can't keep up in terms of growth with what they need to justify that valuation. So is SoFi going to $20 per share? I think it's a possibility. I think if they come through and smash their earnings and they provide very good guidance for 2025, we could see this stock spike up in a significant way. And $20 is not out of the realm of possibility. We've seen it in the past go up to around $22, $23 per share. So it's definitely achievable. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, thank you guys again so much for the continued support. If you like this type of content, subscribe down below and drop a like while you're down there. And as always, have a wonderful rest of your day. And for the joke of the day, what does a Starbucks employee's job title change to in the winter? Check the comments down below for the answer. Thanks for watching.